and welcome to ICM's Week Ahead, where we're having a little bit of change in the market direction in the past couple of days. Unlike what we have been witnessing since May, mostly the dollar was weakening against other major currencies. However, now we're seeing a little bit of a turn back, but still, it's just there are still many fundamentals that needs to be cleared in order to just continue with the current trend. So we're going to start with talking about the latest movers, highlight the top events for the week, and then go over some of the major charts. So first, COVID-19. Now, all the headlines relating to finding new strains, but also vaccination, they're just being a bit disregarded by the market. So we're not seeing much of an attention of what's happening COVID, since most of investors are just optimistic about vaccination and how the course of the vaccination is going around the world. So this is just giving investors the thoughts that we're just going to pass through this and the economic activity is going to recover. However, we have to still just focus on any important headlines that could just impact the market. OPEC Plus meeting last week, top oil producers, they had a meeting where Saudi Arabia just announced surprise cuts of 1 million barrels in February and March in order to try to stabilize the market. They're just afraid of the lockdown's effect on demand for oil, since we saw weakening demand in 2020. So they're afraid that the current lockdown is gonna weigh more on demand and just hurt the current recovery. So they just took a decision in order to try to support or stabilize the market, which was a surprise decision of cutting 1 million barrel per day in February and March, and we saw oil rallying almost 7 to 8% following the headline. U.S. elections and riots. So mainly the Democrats will be securing the majority in both House of Representatives and House of Senate, and then this could give them advantage to pass their agenda, Biden's agenda, when it comes to a presidency on January 20. Despite the riots that took place, despite the turmoil that happened at Capitol Hill, the market was still strengthening, and the U.S. stock indices managed to rise to fresh record highs despite all the turbulence that took place. So finally, on Friday, we had the jobs report, which also had a clear impact on the market. Many people would just assume why the dollar strengthened despite the economy losing jobs in December. So we had on Friday the NFP, we had the unemployment rate, we had the average hourly earnings. So despite the weakening jobs report, despite the losses in the labor market, the average earnings rose significantly, and this just puts some pressure on inflation on the longer run. And this could just add the probability that central banks could just be in a place where they can't afford to keep their interest rates low, and this could just spur them activity, which was also obvious on the rally in U.S. Treasury yields. So the 10-year yields rose on Thursday and Friday, breaking above the 1%, which was the top for a while. And this is their highest level since March. So this definitely supported the US dollar and added some pressure on gold and some risky assets. So these were the key movers last week. Now we're going to highlight the top economic events and releases for this week. It's a bit shy still since we're entering the new year. From on Tuesday, tomorrow, we have from the United States the jobs opening for November and the weekly crude oil stock by the American Petroleum Institute. Moving to Wednesday, we start with the Eurozone with the industrial production for November, which is expecting to show a slight increase of 0.2%. We have to just remember that in November, some of the European countries had lockdowns, and this definitely impacted the economic activity. Moving back to the United States, we have the CPI and crude oil inventories and the bearish book. So these are key indicators for the US economy. Moving to Thursday with the Eurozone, the first reading of the fourth quarter GDP from Germany. This must be one of the key events to watch out for in this week. And then we have the monetary policy statement, the ECB monetary policy statement to be released. and the weekly jobs claims from the United States, and Federal Reserve Chairman Jerome Powell will be speaking. This is one of the top events this week. We have to see how Powell will comment on the latest rise in Treasury yields. We have to just get some clarification on their interest or their insight into what's happening in the economic activity and when the Fed is just willing to taper. So any headlights, any hints about tapering or the time of tapering, this could just have some clear impact on the market. Moving to Friday, it's the busiest among the week. We start with the United Kingdom with the GDP month-on-month expectations of a contraction of 4.6%. Industrial production, manufacturing production for November to rise slightly by 0.4% and 1% respectively. Also moving to the United States, the retail sales for December showing a drop of 0.2%. The expectations of a contraction in retail sales for the second consecutive month. This is definitely due to the surging coronavirus cases that's impacting the economic activity. Also from the US Producer Price Index for December, expectations of an increase by 0.3%. Industrial production for December, expectations of an expansion by 0.4%. Business inventories to rise 0.5%. This is not a good reading. Business inventories, we need to see lower business inventories to make sure that the economic activity is going well. And then we end the week with the US Baker Hughes oil rig count, which rose significantly during the past weeks. And this is just giving us some hints on the recovery in the US oil market. So these are the top economic releases and top economic events that will take place this week. Now let's move to the MetaTrader 4 platform to discuss some of the major charts. So starting with the euro dollar, if we go to the weekly chart, so you can see this start also with the weekly chart. Again, you can see similar formation on the weekly chart, similar candle. However, we're just you can just highlight this trend line combining the previous tops and watch out for any possible reversals. Where could be the next target if we just continue to the upside? In order to get some bit more clarification for a move to the upside, we need to move back above 28.40 level. And if this happens, we can just target 129.54 as the second level, which also could be getting us closer towards the trend line, combining the previous tops. Moving to smaller time frames will make it more clear to you on the possible levels that we could be just heading to. A move back or a dip back below 127 is bearish again, and we could be heading towards previous lows almost near 25 zone, 25.20. This is for the dollar against the Canadian dollar. Moving to gold, which had a sharp fall last week. You can see here following this strong rally to the upside, and then the market reversed and erased all the gains incurred in the past 4 weeks. And this is just a very bearish candle, very bearish formation. However, this just puts us into another range that we could be trading in for a while between 70.60 and 19.60, where we reversed last week. So this is the possible range that we could be trading in for a while, as long as treasury yields, they're just hovering slightly above the 1% or below 1%. So if we're going to range on treasury yields between 0.9 and 1.2, this is the possible level where gold, or this is the possible zone where gold could be trading sideways for a while. Moving to silver, also similar formation. You can see the reversal from almost $27, $28 per an ounce, and this is just adding the range again, 22, 21.80, and the possibility 27.75. We're currently in the middle of the range. You can just highlight these smaller levels in order to detect a smaller range that we could be trading at between 23.45 and 26. But definitely this will just rely or depend on the comments of the Federal Reserve Chairman on how treasury yields will perform in the future. So this is definitely going to decide the future price for mainly metals, gold and silver. WTI, so this is what we were talking about previously for WTI. We were just expecting for a while a range of trading or stabilization between 50 and 43 dollars per barrel. So this area here. However, on the surprise cut from Saudi Arabia, we witnessed this rally to the upside, and it was clear on this move. as long as we keep these gains, we could be just poised into trading inside another range between $60 a barrel and $50 a barrel. So just to stabilize in this area. However, if these gains weren't held and the market reversed these gains, we could be just moving lower back towards $43, $44 a barrel. And this just puts another range between 52 and 43 as a possible range for oil in the coming weeks. So this is it's a bit more clear when we do it that way. So you can see following this upside rally, the market is still, we didn't see any possible or any solid correction following this sharp rally. So watch out for these possible reversals. However, we need a solid reason for reversal. Let's not forget that Saudi Arabia just pushed forward to lowering production in order to just try to stabilize the market as much as they can. So if the demand was still steady, despite these lockdowns, and Saudi Arabia just declined or lowered the supply, this is just going to support further price gains. The Dow Jones, moving to the weekly chart. So we were able to close at record high. However, this is just, you can see how the past candles, you can see tails to the downside, and this is just linking to the buying at the bottom. So every time the market is buying, these dips are getting every time the market is correcting or dropping, these dips are being bought and the market is being pushed higher again. However, this is just putting us in another possible range trading for Dow Jones between 29,400, the previous top ahead of the collapse that happened in February and March. So this is just a range that we could be trading in for Dow Jones for a while. If we move to the daily chart, definitely we need to stay just above 30,800 in order to just keep on moving forward. Else, we could just be poised to a bigger correction to the downside. 30,000 level remains a key level. 30,300 previously was a key level here. So watch out for any dip below it, because it could just add bigger chances for a correction lower than 30,000. Else, we could just move higher. You can use the Fibonacci retracement or extension in order to just go for possible extensions where the market could be heading. 31,600 could be the next possible top for the Dow Jones if we just witness another reversal here and then a move to the upside. This is all for today's session. I'd just like to remind that all the information, news, analysis, and opinions mentioned in this week ahead, they're only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. If you have any questions, please write them down. Perfect. I believe this is it for today. Thank you all for joining and wish you a safe trading week.